Hello again, this is part 3 of the answers to the various questions you asked, and thank you for the questions. It's always actually really good to have questions to answer, to be honest. I often learn a lot from answering other people's questions, so it's a good process. I'm told I missed this question here. I can recall answering it, but sometimes when I switch between charts, so I'm answering a question, I go to a chart, I forget to repress the resume button, so I apologise if I miss this one. There are times today which I find useful. I mean, the opening, I mentioned the PDS system, and that works the open. With tunnels, often lunchtime is a good time to trade the tunnels. But there are no particular times that I exclude, I guess. I mean, I have hotspots. You know, the opening is a hotspot, lunchtime is a hotspot. 1:30 can be quite critical for the markets. That's when the US news often comes out. Close on FTSE is not particularly relevant. Well, I mean, it's obviously relevant, but it doesn't have anything particularly momentous about it. Although the close, the last hour or so on FTSE and the Dow can be quite strong. I like to look at the US markets after FTSE has closed. I think it's worth looking at the prices on the FTSE binary bets after FTSE's closed for the following day. Although you can't do that at the weekend. I think this question actually again comes down to this personality thing and what suits you, what you find best. Trading, or successful trading, is a process of finding winning habits, really. This is why I encourage people, in fact, on the PDS system, for example, if you trade, say, £10 a point, then I would encourage you to take some profits at, say, £3 a point. If you're at, say, 10 points up, take the profits. You know, that makes you a winner straight away. Don't go all out for everything. Just take a bit of profits. Make yourself a winner. It's amazing how much better you feel when you start to take some profits. It's critical to let your profits run, but no harm taking some profits along the way. Right, we got to here in the second part of these answers. As I said, one of you told me that I had missed a bit, so I hope I've now covered that. But any questions you have going through this, please just email them to me. And it's probably easier for me if you term your emails in the terms of a number of different questions. Although I'm also want to hear how you're doing, obviously. Okay, so question 2 of the 50. Two best trades were a large spike down on 22nd of January and a spike up on open on 23rd of January. Well over 100 points on both days. Okay, I've got to read a comment on that. I mean, well done, good. But the others who didn't do that trade might want to just have a look at that and see what there is to learn from it. Paper trading had a couple of systems on the binaries. Over 40 trades, of course. We'll start to test. Okay, that's just good news. I tried that update a free trial. It's probably the live feed. Kept getting end of day instead. Question 4. Okay, I've had no problem myself with the live feed, so difficult to comment on that. I guess it might depend on the different internet service providers. End of day, I mean, it's useful, of course, but it's not necessarily what you want. I've tried eSignal. I think eSignal is fine. I guess I'm just more used to 10.4. ShareScope, I don't think they cover the FTSE at all. I could be wrong about that. I don't recommend ShareScope. I don't know it. eSignal seems fine. Updater is certainly very good. I think it has a wonderful range of indicators. It's by far the best product I've come across. The actual feed, I'm using the Comstock feed, which is a feed that they provide with a package. You may be better off with a different feed, but we are talking more money. So, as with most things, it's a question of getting the right balance that you want. Spikes, fail breaks, retests. See our sell point wait for 2 TPOs. How long are you going to enter the market short? Okay, these two questions here are duplicates. We've already covered those. On spikes, do you look for it to spike past? This one also, but I mean, spikes certainly are improved if you have got some significant support or resistance or round numbers around the place. We'll cover question 8 as well. Right, question 11. It is still a difficult market to follow trends, especially as we appear to be starting life one of the most volatile and troublesome times for many years. Yes, that's true, I think. I think we probably are. Markets are always changing. That's the only guarantee you got, that you always get change. I think sometimes the patterns are clearer in this kind of market than they are in a dithery market. At least when you get on a good trade, as we've seen from other comments, you do get some pretty good action. The important thing to learn really is that you can't assume it'll always be this way. It'll be different. It'll be equally challenging but different. And it won't actually last that long. In fact, even now, we're getting phases where the volatility starts to come out. In fact, into expiry is often a quieter time, as it was, in fact, a quieter time. And now after expiry, it's becoming more volatile again, which is exactly what I'd expect. But to be honest, it's never easy. It's always challenging, which I guess that's what keeps me amused, I guess, really. Looking at all the bad news, cannot find much good. We should be heading for an abyss. That is quite possible, certainly. So the longer term bets in that case, with bets for markets, better markets, makes sense. Especially if you're using daily data and making and looking at longer term signals, then I would certainly encourage you to look at those two websites and to go for bets that you see there, which time with your analysis. Now for a reality check on the markets. I believe no one can beat the market, only play on with and hopefully be its friend, and it befriends you. You certainly can beat the market. I'm not saying it's easy, but I do it. It is done. So I think to believe you can't beat it is actually not a good idea, because if you believe you can't beat it, you probably won't, so you make losses. I'm not sure you quite mean that, because it doesn't seem to be quite what we were saying in the rest of the comment. But certainly it is challenging, but you can beat it. I think that's a far more useful belief than that you can't beat it. Okay, this point here is quite interesting as well. I had a couple of early strategies which appeared to work for a while until the market's volatility really pushed the prices beyond the fair. Systems will phase in and phase out. This is why I encourage you to have more than one approach. They won't all work at the same time. When you get action like this, which is quite unusual, systems that you used in quieter time will probably cease to function, and vice versa. So that's always going to be the case. It's never going to change. Okay, question 15. During the more recent volatility, move the ladder up to 50. Which all that symbol there means in that context. Prices have really moved recently into levels on title. We're showing around 45. 45, take about an evens bet. Often you sort of call things 50-50. I'd rather call something which has a higher return, really. If risk-reward level is wrong, then you don't want to go with it, basically. That's cut and dried. In fact, you always want low-risk opportunities. So it's not. It sounds like it's not emotions playing up. It is wise trading. Question 16. Christmas is surely kind to the market. Yes, there is normally an excellent rally of sorts. We got one this year. After reading a book, especially the Binary Reading Bible, I think I understand all the different types of bets, how and when to use them. Sometimes it eludes me. This again is experience. It does take time. There's quite a lot of bets to get to grips with. And I'm getting feedback from you that you're looking at bets I don't really look at very much. The high-low bets, particularly, perhaps, and using those in ways that I hadn't really thought about. So, there's a lot of stuff out there which I haven't had time to get to grips with totally. And the more you put into it, the more you'll get out of it. Question 18. I've seen recently that large number of bets have already expired before any fair price can be placed. Well, that's we do get these very big gap opens, especially in these very volatile times. Okay, question 18. Yes, it's. I mean, the question really is that how do you decide when to get out? You can buy the very long, these bets that are a long way out of the money, very cheaply, even in these volatile times. You get a fast move in the right direction. You see some profit. Say buy at 10 or below 10, then goes around to around 18, 20. So you might double your money, in fact. But how do you decide to get out? Yeah, there is no easy answer to this. There is no way to decide. What I tend to do is I certainly, if I'm trading £10 a point as an example, and I see that kind of move, I might well take profit on £3 a point to just cover my costs, so that the rest is there for free. Because in this kind of action, it's very easy to see these moves, but to miss out on any profit. Or I try and just buy extremely cheaply on the basis that if I buy at 2 or 3, as of course I did on the 11th of October, there are occasionally that will come good. You just need to have the right setup to make that sort of bet worthwhile. If you buy that bet all the time, you'll probably just lose money. I haven't tried it that way, but it's logical that you just lose money. But when you have a good sell signal and there are some cheap bets around, then that's something completely different. Question 19. Can you explain how to use a high-low bets during the volatile time? Well, high-low bets are quite good. I think particularly what is a good idea is to look for the early action. If we see an early rally or early decline, then look at the price of the bet which is on that initial high or low, because that can very often become quite a very expensive bet to sell. If you're expecting a reversal, it might easily get taken out by just a few points, which could just send that bet to zero. So that's one way of doing it. Otherwise, just look for the two key bets here are the Dow cash high to be greater than plus 200, or cash low to be less than minus 200, and FTSE the same bets at the 100 level. Those are pretty good bets. If you look, if you find good prices, especially with news. I mean, I think one of the key things in binary is trading the news. We did quite well at the end of January on the US interest rate cut by buying the Dow mainly. I mean, it is actually important to go with the bets on the market open when the news comes out. We had less success with FTSE because we couldn't trade those bets because the market wasn't open when the news came out. I'm not sure I've answered that question fully, so if you want more information on that one, then I'll ask again. Alright, so question 20. I saw it difficult to pick the right binaries to suit each trade. So let me just draw that line again rather than crossing out the... This, I believe, stems from not having sufficient knowledge or experience. Well, so you've rather answered your own question here. The way to get the experience is by putting in the work and looking through the bets available. And seeing what suits it best. We never really know what to expect. I mean, the what to expect bit is the unknown, really. We just have to go with the range of probabilities and the range of possibilities. But again, that's also a question of time, really. I'm not trying to avoid the question, but it's quite difficult to answer a general question like this specifically. But there are only actually so many bets which may be useful. I mean, we don't often talk about the very shorter term bets, like the hourly bets, 5-minute bets. I mean, these are bets some people really like. They're not, to my taste, terribly, but it's something that it's worth considering everything that's available. There's all a difference between knowing whether it's a better value to trade the market up or down 30, 50 points. Yes. But you will find, of course, that these bets, the £100, £200 bets, will be more expensive. But they'll be cheaper than these bets. You get a much better return if you get that right than if you get this right. In fact, I have found in the past I've recommended the high lows, 100, 200, and people have actually gone for these bets on the basis that if I think it might go 100 points up or down, then they'll certainly go 30, 50 points up or down. So it's a question of balance and again personality as to which suits you best. Question 21. Since January the 1st, I believe LTT has only put one full recommendation, a formal recommendation. We've made plenty of time-wise recommendations. There are practical problems with doing formal recommendations. Many of the best trades I find are fairly immediate things. The best trades do in fact go well from the minute you enter them, and they tend to go all the way. You just can't do that with a formal recommendation because by the time you actually got the thing written down, you've lost the best price. So really, that sort of spoon feeding is not really the best way to trade in very short-term instruments. It works better with the longer-term bets, to be honest. But yes, I mean, especially in these very volatile conditions where things change very, very quickly. It has proven difficult. There have been 3 or 4 times, in fact, in January and perhaps the first couple of weeks of February, where I've been putting together a recommendation, having seen the signal, and by the time it actually gets, I mean, it may take me 10 minutes to write it. By the time it actually goes off to Fleet Street to be sent out, the prices has run away with us from us. So yes, certainly these very volatile conditions do make it difficult to make full recommendations. Question 22. I think there's quite a lot in here actually. I think you're reading too much into what I say. I mean, my comment that it was better to get out early was simply because that was the case. We weren't to know that. I didn't do it myself, but in the end, the people who took a quick profit were the people who did the best out of that particular trade. So I think it's a mistake to read too much into my comments in that context. And the important thing, it's also irrelevant really. The important thing is how do you feel you traded that. You need to have confidence in your own approach and your own decision making and what you decide to do in the marketplace. It really is fairly irrelevant what anybody else says or thinks. I mean, I appreciate that that's easier said than done, but the important thing is that you are happy with the way you approach the markets, and if you have decided that letting profits run, and with binaries maybe that means waiting till it goes all the way, or not, then just the fact you do that is something that you congratulate yourself for doing. If you don't do that, and in fact you therefore ignore your own rules, then that would be a case for, I mean, it'd be a double-edged sword. On the one hand, you may have taken a profit, but on the other hand, you've broken your rules. The key thing really is to formulate your own rules and not to be too affected by what anybody else says. The important thing is that you're doing what you think is right, and that you're consistent, and that you're making money overall. I think that there's a fair bit in there, so please give me some feedback on that one. 23, I'm using 10.4. Kind of looking for 5, so I'm getting confused about it. Well, corrections are confusing. I mean, a correction is a less certain movement in the marketplace, so they often are very confusing. On question 3, I think I'll concentrate on a bit about this missed opportunity. Sell the one touch 75 as a no touch. I think when you have an opportunity where there is the risk is pretty low, I'd be fairly sort of inclined to just go for it. I mean, especially with the one touch. I mean, as time dwindles away, the one touch will get cheaper and cheaper. So, I mean, that time's on your side in that context. You don't say what. I say when support's holding it. Okay. I mean, it depends again on how strong the support level was. I haven't actually reviewed this, but if you've got a very low risk opportunity, and minutes later, I mean, it is even if you're just going at £1 or £2 a point. So IG, the minimum is now £1. Just the more trading you do, the more experience you get. And if you see opportunities and you have isolated that support does exist at that level, you see some evidence it's holding, then it would make sense to go for it. It's very true that the most emotionally draining thing I've ever found in markets is not making an occasional loss or losses per se, but missing opportunities. I think missing opportunities is by far the most draining aspect, and to be avoided. It's far better to go with the opportunities. Question 24. I'm going to log every single thing down. This makes a lot of sense. It actually makes a lot of sense to log it down before you do anything, although with binaries, as the price action can be so fast, that may be very, very counterproductive. But when you write things down, you are forced to be logical. I find it very easy to be very illogical when just thinking. And yes, I mean, my plan is that by the end of February I'll be in a position to send at request every single identifier and the action I took. That can be extremely useful. The more research you do, the more work you do, the more you're building on rock, and the more you have to fall back on. Question 25, is any guidance you offer me help with dividing a technique to more quickly identify the best binaries? Not really, because it's the whole thing is so changeable. I mean, the guidelines are the exotics are the nicer bets, but they're further away often and they're more expensive. The indices are less attractive because they don't expire immediately, but you get closer bets, and so it's really a question of just looking at what's available. And also, of course, we do find, because of the volatility factor, that the pricing changes quite dramatically. I mean, the October the 11th trade on the Dow was an example where you had really excellent prices. But with the volatility coming in this year, it's been difficult to find those sort of prices. I mean, January the 8th was an example where it was pretty good. But things change too much really to be able to offer precise or guidelines which can be terribly useful, I think, other than what I've just said, really. 26. It's really a question of just seeing what, just following your signals, and seeing what happens. I find that that when I see a signal, there's no clear indication where it might go. Often, I mean, with Elliott 5, with the Elliott pattern, sometimes you do get indications, and I think that's fairly clear. I mean, you see a 5-way pattern, which I'll just draw, and you see that kind of thing. Then very often the fifth wave will be the same length for that one. So over here is your target, as it were. When you see an ABC, very often the C wave will be the same length. That was plus 50 points. Then the C wave will be a plus 50 points. So with Elliott's, with spikes, I think it's more difficult. You just don't know really how far a move might go, and these are only rough guidelines. There's no guarantee. I would also use retracements. I mean, we never didn't discuss retracements hugely at the retreat, but they are useful. If you see a move and there's a correction coming in, then I would, if you're using Updata, they have quite a useful retracement tool, which is very simple to use. You just click on the tool, which is the Fibonacci retracements. You then just click on the low, hold the mouse key down, take the cursor up to the high, and all the retracements will be there before you, which is really very simple. But that's pretty useful. I guess that's the point we could cover in more detail. I'm trying not to spend too much time on this. We're already in 24 minutes, so I can see this is going to be part 3 with a part 4 coming. But let's see, 27. Okay, I think I've already covered books on Elliott wave theory. Right, question 28 is a duplicate. We've already covered that somewhere else. Trading at January, 5 up the fail break to 9th. Looks like covering that. Okay, we have a number of opportunities here. I think it's probably best that you study these yourselves if you're interested. I mean, I left those there because I think it's useful to have feedback. All right, 31. I started the well, mostly short. There always been bad weeks. The key thing is to make sure your risk control is in order, so that you don't have terrible weeks. And also, if things start looking really bad, then just halve your position size, which makes a huge difference, really. Impossible. Okay, I mean I understand that not getting the trades, as I just said, in fact, missed opportunities are one of the worst things, and I think with experience you just find that less of a problem. Really, there's always more opportunities, but it's when you haven't really got an opportunity unless it's a good price. Okay, so that's a key point. I'm not bothered when I don't take a trade because the price isn't that great. I'm very bothered if I don't take a trade where the price is just right. I mean that really pisses me off. But to miss a trade where the price is not okay, then fine. I'll wait for the next opportunity. So I think that those two factors help. 32. I've learned. Yes. Well, the really long odd bets are really attractive, preferably sub 10. Yeah. Well, I wouldn't get excited about evens. It's not the greatest thing in the world. If I overtrade hopelessly, do you offer the thrill? I suspect. This is a common problem, and you've got to really decide for yourself what you want. It is very easy to decide that it's just so much fun that you just keep doing it. I can't really knock that. If you're enjoying, it's your life. You're an adult. It's up to you how you want to spend it. Trading can be a very enjoyable hobby. It doesn't have to be a major source of income. I mean, that's a personal decision. Many people make that decision subconsciously. They just decide it's going to be fun, and they enjoy it, and they're not that bothered about the cash side. Maybe the cash side is sorted out elsewhere. So it is something you need perhaps to think about and reflect on yourself. Because I mean that's actually an extremely important aspect of the whole thing. The motivations for getting into the market may vary. That very seldom, in my experience, are they financially driven. Especially with people who are successful already. People who are successful already often are looking for challenges rather than more money. They often have all the money they really want. And they're just perhaps a bit bored with the way they're making it, and so looking for another way of making it, which may be fun as well. And it's sometimes quite difficult to actually distinguish those motivations and to separate them. But if you want to be successful, then you've really got to. If you want to make money from trading, then you've got to look at this very carefully, and you've got to say, well, okay, I've been trading because it's fun, but it's not making any money. I want to make money. And you've got to stop having fun in a way. I mean, maybe you can do both, but the discipline can make it difficult. I mean, being very disciplined about something can make it not be so much fun. But that's a very important point. I think that's probably the most important point I've talked about this particular session so far. 33. How to develop the necessary patience. It can help to have other distractions or to do other things, in fact. So if you're totally fixated on the marketplace, in fact, this is one of the things that can be a problem if you decide to become a full-time trader, having just been a part-time trader before. You come to the market and you decide that it's your business, and you're going to treat it like a business and work, okay, say 9 to 5, for want of discussion. Okay, so that's 8 hours with an hour for lunch, 7 hours. And what are you going to do in those 7 hours? Well, you're a trader, so you're going to trade. And so you trade, 10 times in the day. Well, that's not a good thing. With trading, less is more, and it's all about selecting the best opportunities, and it's not easy. It's very easy to take substandard positions, and again, it's a matter of experience, really. That there's, but certainly, I find. I mean, for example, one aspect of having no patience is cutting profits. That you're in a trade and it's up a bit and you want to do something, so you take your profit. Well, don't take your profit, add to the position, increase your position, so it's up, so it's add a bit more. It's just a way of distracting the brain, as it were, the conscious mind, so it does something useful rather than doing something that's not useful. Losses lately don't necessarily help. In fact, they can egg you on to trade even more. But it's mainly psychology, and it just requires some, or can require some fairly detailed analysis. Right, 34. Okay, well, I mean, I guess this is what I'm saying, really, not with clear enough signals or not recognising them when they're there. Um, it is actually, if you're in a sort of frenzy almost. I mean, frenzy is not the right word, but if you are in a sort of excited state, you're excited about what you're doing, then becoming dispassionate can be a big step forwards to making better decisions. And it sounds like there may be an element of that in that question. 35. I'm unsure about some of the patterns. I can spot 5 waves short term, but find it harder to do so long term. Okay, we'll have discussed chart intervals. And as far as the patterns are concerned, again, it is a matter of experience. So I think, in fact, we've now done half an hour. We've got on to question 35. I think we've got 15 questions left. I'll probably leave those, in fact, until we get the next set of questions in. So the next session will probably start with the next few questions on. That'll be the start of the next month's sequence. I'm very happy if somebody, if I've missed a question that's actually critical to somebody, then please let me know, and I will. Well, I mean, I have mentioned these one-to-one telephone conversations. I mean, those are available when you want. So if you want to call, just drop me an email, and we'll get together and a chat. And I hope that's useful. Thank you for listening.